Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a beautiful day. And in today's markets, guys, a lot of green after yesterday's massive amounts of red. And a lot of that green came after a very nice jobs report that we got in the morning, the non-farm payrolls. So in terms of today's video, guys, we're going to go over the non-farm payrolls numbers and see how they impacted markets across the board. And then we're going to take a look at technical analysis and see, after yesterday's drop and today's pop, how is everything standing? Are we still respecting major levels in terms of our major indexes? And lastly, our big tech names. And then we're going to go over a few subscriber requests that we have prepared for you guys today. So I was asking you guys to provide me some tickers if you wanted me to cover them. And we have a few. Number one from James. He's asking for Etsy, so we're going to do that at the end of today's video. And after that, Naveed, one of our long-term subscribers as well, has asked me to do a few of them: CLS, Vertiv, Adobe, and Net. So I will be doing this, and yes, Naveed, I will be doing them in that specific order. So without further ado, guys, let's get right into today's video. SPY up 1.04%, QQQ up 1.18%, and it was a stark contrast from yesterday's trading. Take a look at the heat map, guys. Everything now in the green. Yesterday was really a fear-driven sell-off. We had a few catalysts going on at the same time. Number one, we had Neil Kashkari come on from the Federal Reserve at around 2 p.m. and say that potentially, if inflation remains sticky, that the Federal Reserve might not do any cuts this year. Obviously, that was a very bearish perspective, and it started a sell-off. Couple that with geopolitical tensions that we got at the same time. That phone call between President Joe Biden and Prime Minister of Israel, Benjamin Netanyahu, where he basically gave Netanyahu an ultimatum. Cool down on the warfare in the Gaza Strip, because now it's starting to affect and potentially kill humanitarian workers that are working in the region, or else. That's literally what he told the Prime Minister of Israel. So far, we don't know what the or else is, but it could potentially be the U.S. pulling out of support for Israel in this current warfare situation. And at the same time as that, we also had Israel and Iran getting into it, guys. Tensions getting a little bit heater and a little bit hot. And at the same time, we also had news come out of Ukraine and Russia about those tensions as well. So all of that together really led to a massive fear-driven sell-off, the likes of which I had not seen pretty much of all of 2024. This was such a brutal sell-off here, guys, in 2 hours of trading, really erasing, on the SPY at the point yesterday, over 2% in value. That was the most significant drop in one single day, top to bottom, of the entire year so far. Now, even though we got the drop, guys, we still respected our levels. We were watching for a flush of this key support zone. Even though we lost our trend lines, we were looking for the flush into today. If the jobs report would have come out negative today, the bears would have definitely had a chance. But the jobs report provided some good guidance for the bulls, and the bulls were able to recover. That's why we have some very nice broad market recovery. Now, there are only few plays that were affected in today's activity to the downside. You can see Intel not having a very good day, Tesla not having a very good day as well. And most of the plays that did not have a very good day, guys, were interest rate sensitive plays, because when we take a look at the jobs report, you'll see that it actually came in bullish. And whenever we get a positive jobs report, guys, it just leads to higher rates for longer, because the economy is healthy, the jobs market is healthy, inflation's still on a downtrend. So the Federal Reserve just seeing no urgency to cut rates right away. And obviously that does hurt companies like Tesla, who are heavily dependent on interest rates. Take a look at your interest rate increases for the day. You can see the 20-year yield putting it about 1.8% to the upside. Very green day on yield, so really hurting your interest rate sensitive stocks. And even the 10-year yield, guys, hitting levels that we haven't really seen since pretty much last November. So that was one area of the market that was affected. But for the most part, everything recovering nicely. Financials, healthcare getting a lot of love after their drops over the past couple of days, and technology really taking it upon themselves to drive this market higher. On the one-day relative, you can see that today was largely positive. However, on the 1-week relative, we do still have some losses. So even after today's beautiful gains on SPY and QQQ, unfortunately, we are still down for the week, and that is what we can see here on the 1-week performance. The only positive sectors for the week: communication services, which was led by Google and Meta all week. They've really been your outstanding bulls during this period of uncertainty. and energy, of course. The rest of everything, though, guys, healthcare, financials, and most of technology still down on a 1 week relative basis. So before we get into more technical analysis, let's take a quick look at what happened on the jobs report. I'm not going to go through any articles, though. We're just going to go over a few of the numbers. So take a look down here, guys. Here is your non-farm payrolls result. So this just measures the amount of jobs that were created in the public sector, and it just measures anything except for agricultural work, because you guys know that agricultural work is obviously very seasonal, where a lot of farmers will hire a lot of workers in the beginning and the end of crop season. So basically spring and fall. So they remove those jobs. That's why this one is so important. So it's basically a very broad indicator of how well the jobs market is doing. Very, very watched upon by analysts and economists alike. And the consensus, guys, was for about 200,000 jobs created during the month of March. Look at this blowout. 303,000 jobs were added to the economy in March, well above the expectation. So that obviously was a good sign for the economy. It shows that, the labor market is healthy. The economy is healthy. We got that data last week in terms of GDP numbers. But once again, guys, double-edged sword, right? Even though this is good for the economy, it once again just pushes the Fed's hand to be like, you know what? We don't really have to increase interest rates right away, because while they're high right now, it's not breaking anything yet. It's not breaking the jobs market, not breaking the economy. So they can afford to be a bit more patient and see more inflation data over the next coming months. Now, we did have other interesting factors here. You can see the unemployment rate was at a high last month in February of 3.9% in February, and the expectation was 3.9. We actually came in below that. So unemployment rate 3.8%, which is relatively in line, guys, with the past couple of years, right? Even prior to the pandemic, this is a very normal unemployment rate for a healthy economy. And as a whole, we also got average hourly earnings. So this was no indication of a wage price spiral. A lot of people who are nervous about the resurgence of inflation, one metric that they look at a lot is our average hourly earnings going up faster than the pace of inflation, which can create a wage price spiral where companies have to pay their employees more to retain them. And then obviously those employees with their higher salaries go out and buy more goods, which raises the price of goods. And then companies have to pay their employees more because the cost of living goes up, and it just spirals out of control. So this average hourly earnings staying roughly in line with expectations and down from the month of February of 4.3 just reiterates that the jobs market is healthy and wage increases are not out of control. They're largely on pace with inflation. So that is very, very good. As a whole, guys, a very positive jobs report across all factors, and really led first thing in the morning, as soon as this report was released, right, really led to a very net increase in the markets. You can see that right here, where we just shot up in the morning and then kind of just cooled off into the later hours of our trading session today. So all in all, very, very good. Let's get right into our technical analysis of our major indexes, shall we? So after yesterday's absolute disaster of a day, right, we actually came below the trend line on SPY. Now, today's markets did a great job in recovering a lot of that, but keep in mind, we are still in the context of a daily downtrend at this point, potentially expecting a lower high and maybe lower low. Now, with today's bounce, we have a very nice bounce underway. The percentage of the bounce is important, of course, and we have bounced roughly about 61.8%. I know it's so small on the chart, guys. I really apologize that you can't see that. Let me try to blow it up for you right now, right? So you can see that the top end of the bounce today came right up to our 618 Fibonacci line, which is a good sign, guys. That really gives the bulls, it's created enough space for the bulls for them to potentially go for the higher low into potential reversal of the daily uptrend. That would be best case scenario. The worst case scenario would be obviously next week if we just create this lower high and we lose the hourly time frame into early next week and potentially set a new hourly downtrend. So we're trying desperately, guys, obviously, right? So after this big engulfing move, we were expecting, as of yesterday's video as well, the lower high, and then we need to see, right, after measuring the size of this bounce, how well will the bulls be able to defend this essentially? And as you can see, they're trying to change this into an hourly uptrend. However, if we fail this into Monday and just roll over into an hourly downtrend, we have to keep a very close eye on yesterday's low, which will bring us into this big support range, which I like to call the flush zone. Why is it the flush zone, guys? Well, if we lose this area, we lose our most recent weekly higher lows, right? Weekly higher lows. If we lose those, we would lose the weekly uptrend, and that would be notable to us because SPY has not lost the weekly uptrend since pretty much last fall. So still on the watch for the potential of the technical correction, but as of now, the bulls have to give it to them. They're playing great defense. That's why on the channel, guys, I always say we remain data dependent, right? Even though they're starting to break the levels here, we were raising concerns in yesterday's videos about the number of red flags that were currently in the markets. We were talking about the loss of the trend lines, the loss of the moving averages in the context of daily downtrends, and how that might influence here our weekly moves as well, right? So we obviously know that we've been weekly overbought for quite some time on the S&P 500, and we obviously know too that momentum is kind of slowing down. You can see really tapering off here on the MACD. So those red flags, and those red flags were apparent really across the board on a number of indexes, SPY, QQQ, and healthcare. Financials, the only one really being spared as of now. So we will continue to monitor this one day at a time. The bulls still have their work cut out for them, but don't count them out of the race yet. Obviously, you guys know we are in the context of an overall bullish market, right? So it's going to take a lot to derail these bulls in a significant fashion. And we saw that today, right? Unless we get, and I've shown this a lot in the most recent days, right? And until we get some of these catalysts, these 5 catalysts starting to come into play, it's going to be excessively difficult for the bears to really crush us, right? We can start a technical sell-off, and the technical sell-off yesterday was started. However, when we get positive data like this in terms of jobs or the economy, it's so hard for the bears to just flush this in the midst of positive data. Don't forget, guys, that a lot of these companies in the S&P 500 and the QQQs are not really affected by high interest rates. And all of these larger companies, the ones that make up the most weight in the indexes, basically, right? Financials can be Visa, MasterCard, American Express. They have so much cash and generate free cash flow. They don't care about interest rates. They just pass on the increase in rates to their customers. JP Morgan and the banks, they've been doing fantastic as well. Very rich in cash, so they're not affected by high rates either. If anything, they just make more money on their clients. Big tech obviously is flush with cash as well. They have so much cash that they're not really affected by rates because they just don't have high debt. And even your leaders in healthcare are in the same situation where they don't really run a significant amount of debt, right? So as a whole, there's so many of these companies in the S&P 500 that just don't care about high interest rates. And the proof of that was in last quarterly earnings, guys. We went over a lot of these companies' earnings, whether they were healthcare, financials plays, or tech plays. And we really saw that high rates are not affecting their business. They're still increasing EPS, still increasing free cash flow, and still doing a great job of increasing that bottom line. And that comes off the back of in 2022 and last year in 2023, they really leaned down their businesses. They fired a lot of employees. They cut back on unnecessary services. And as a result, they were able to maintain very stable margins throughout last year and 2022, which were the big periods of uncertainty. But now that the economy is doing fairly well, now that the jobs market is doing fairly well as well, and that these companies have gotten through the worst period in recent memory in terms of supply chain congestion and rising costs and stuff like that, now that they're through it, well, it's pretty much business back to normal for your larger names in the markets. So everything's still looking fairly good. We just need to be on a close watch for yesterday's low. And then obviously to the upside, if we can engulf more of this move, going to be looking for the higher low for the daily uptrend shift back to the bulls. If we don't, the middle case scenario would really be maintaining a tightening range outside of this trend line, similar a bit to what QQQ is doing right now, right? They're kind of outside of the trend line, and being outside of the trend line is not so bad, guys. I know you might see the loss of the trend line as a big negative factor, but I've shown this on the channel in the prior days' video, right? You can go back to a lot of bull markets, and you can see that sometimes we just operate in different trend channels, right? So you can see one right here, then they lose it, trade roughly sideways there for a couple of weeks on end, and then resume a different trend channel as a whole, right? So the loss of the channel is not the end all be all. That's what I'm trying to prove, right? The loss of the channel is just one red flag that we have to take in consideration. But if the bears are not able to follow through by flushing your horizontal support as well, well, then we're not going to get the weekly sell-off that we've been anticipating, right? Need to lose the weekly time frame for that to manifest. And so far, the bulls are just not allowing that to happen. The most that the bears are getting at this point, guys, are 1-2 days worth of damage saved by NVIDIA earnings, right? Same here, 1-2 days of damage, and they keep getting saved. And even when we come down to this lower end of the trend line, they even lost it here a couple weeks back, only for one single day, and they were able to get it back. So we'll keep a close eye on QQQ as well. Same analysis as SPY pretty much, although we're below the trend line, although we're below our moving averages as well. Context, daily downtrend. At this point, the size of the bounce is fairly decent. I would need to see a little bit more. If Monday can be green, it's going to give the bulls the best shot possible at setting the daily higher low and moving back into this trend line potentially. The middle case scenario is obviously if you just maintain somewhat of a tightening range in this whole 440, 430 range, right? In terms of the QQQ, up until we have our company earnings. All of big tech at this point will be reporting at the end of the month of April. So I wouldn't really be expecting any significant gains much before those earnings, but also to the downside, guys. We can't really be expecting any major losses until we lose this area. If we lose this area, your technical sell-off will be started on big tech. And at that point, it will be up to big tech on those earnings calls at the end of April. Let's say for some much reason, we do something like this for the next couple of weeks until our earnings cycle. If the market truly does break down, right? Well, then if big tech has good earnings, they may just be able to save the market as a whole. And that period would just be a setting of the monthly low early in April, right? And then potentially being able to reverse a large part of this candle into the end of the month. So we'll take this one day at a time here, guys, right? Really dependent on the lower levels to be maintained for the bulls. One thing's for sure, if we start closing below this, guys, I really do think that at that point, that is when we're going to get more of weekly consolidation. But now the bulls holding pretty much their last line of defense. Now moving on to financials. So financials yesterday had lost the 12 EMA, and that was very notable to us because we hadn't really lost it in a significant fashion, closing hard red below the 12 EMA in the past 4 months. There was a few times where we were below it, but you can see the bulls were able to recapture those events fairly quickly. Now this time we have gone back above the 12 EMA as well, so it's looking fairly good. But however, right, we are in the context now of somewhat of a daily downtrend. Take a look at the size of this bounce. The size of this bounce was about 50%. So in one day, we were able to recapture 50% of the damage. I would like to see a little bit more follow through in the Monday session. That way it really creates enough space to possibly set up for the higher low into higher high daily trend change. And at that point, the bulls will have no longer anything to worry about. However, if we start dipping more lower high into lower low, and keep in mind, guys, how do you know that the lower high is set? Well, we need to lose this hourly trend, right? So Monday's session is going to be crucial. Will we be able to set the hourly uptrend, or will the bulls roll over, set the hourly downtrend, and start plunging back towards yesterday's low, which will be the key on watch, because if we flush it, the daily downtrend simply continues. Your weekly consolidation just continues at this point as well. And my next target personally for financials would be the 12 EMA 40.2 for a financial pullback, which is really going to bring us back into previous all-time high choppy territory. So keep that in mind for financials. Now moving on to healthcare. Healthcare not looking too bad as well, up 0.89% on the day, but healthcare still in the context of this daily downtrend that they've set right here. So that being said, guys, today was a decent bounce. Now, we have to measure the size of the bounce in relation to 145. So let's do that together right now. In relation to 145, we've recaptured roughly 62% of the move, which is probabilities wise a very good bounce for the bulls. It does give them the opportunity of setting the higher low into higher high and trying to recapture this daily uptrend as a whole. Now, keep in mind, healthcare, one of our weaker sectors. Why? Because even though the week closed on a fairly bullish note here today, we did lose the weekly uptrend over the course of the week. This is your first major index that is now in a weekly downtrend. SPY, still not in a weekly downtrend, still looking good, right, in the context of this weekly uptrend. QQQ as well, still has not lost that weekly downtrend, weekly uptrend as well, still protecting it roughly. Financials, obviously still very healthy, still looking for the weekly higher low. No chance of losing the weekly uptrend here just yet. And then healthcare is the only one of our major sectors that has lost the ball a little bit to the downside. But that is not that big of a deal here, guys. We are coming up on very large support, which is your previous all-time high area of resistance, now should be acting as support for the bulls. That is pretty much your 141 all the way down to your previous weekly low, which was right here about 137. So the bulls are coming in to a very congested area, and I do think that provides decent support for them. If they were to come down into there, as a matter of fact, That would be a drop of about 5-6%. And that's usually how much healthcare tends to drop at one single time when they have these pullbacks in the context of an overall bull run. Take a look at here. You can see, 4-6% at any given time, right? That's usually how much healthcare pulls back in the context of an overall uptrend. And I do think that is just the same because we are in the context, guys, now at this point of a monthly long-term uptrend, just looking for the monthly higher low for further trend expansion. So even if we continue consolidating through the month of April, that'll be just fine. Keep an eye though, guys, we do have overhead resistance right here, our moving averages, and this big area of support, which is now resistance at about 144.71. So I do believe if the bulls pull up into here, they may get rejected first, and then they'll have an attempt setting a higher low and trying it again. So we'll be keeping an eye on that. On healthcare for the next coming weeks. And the trade that I'm most likely looking at, guys, will be a little bit of AbbVie here. AbbVie, coming significantly off its moving averages as well, really getting crushed yesterday in yesterday's trading. And on the weekly, and the weekly as a whole, guys, really just looking for the weekly higher low. And we're coming up to a beautiful zone here, guys. Take a look at this area right here, right? Such a powerful area. This is pretty much the breakout of the zone, and now we want to retest it as support in the context of a beautiful monthly uptrend. So there could be a very nice swing trade opportunity for one of your most solid healthcare stocks in this region down here. So I'll be keeping a close eye on this one, especially next week, to maybe trade some short puts here if I can get them below 170. Such a solid company is AbbVie. Now moving on to IWM Russell, putting in a little bit of gains here today, 0.33%, but the Russell not out of the woods. They did create a new low this morning. So at this point, guys, we are in the context of a daily downtrend, right? The bears really reversing this daily uptrend. Flush of the lows, daily downtrend confirmed at this point. So now we'll be keeping an eye, guys, since it's a daily downtrend, on the lower areas of support. Where do we have to watch? This key level that I keep bringing up. Seems as though I bring up this area every single video for the last year at this point, because it's true. We have been pretty much rejected so many times previously, right? Now we're finally above it, so it should be acting as support. Keep an eye, key level right here, 200. If you lose the 200 mark, you do lose the weekly higher low and lose the weekly uptrend. However, that would just be for very healthy monthly consolidation at this point. Just looking for the monthly higher low, anything above 188. This guy right down here, just looking for the monthly higher low for an attempt at smashing through this big area, 210, 212, which we seem to be struggling at right now. So the dips in the Russell, in my opinion, do represent a buying opportunity if we really dip below 200 here, but be very patient for the Russell, guys. The Russell can't really lift off too much until we start seeing some of these yields, some of these moves in yields really start getting subdued, right? The Russell really doesn't like aggressive moves up in the yield because so many of these companies are either small to medium regional banks, which are heavily exposed to the fluctuations in interest rates, because a lot of them are exposed to real estate, namely commercial real estate, which is a problem that the major banks don't have. A lot of these smaller and regional banks, they're not very well capitalized versus something like a JP Morgan or Bank of America. And those small and regional banks represent 17-18% of the weight of IWM. And obviously in IWM as well, you have a lot of technology companies that are running a lot of debt to grow. A lot of these companies are not yet profitable. And you guys know when you have to issue debt at high interest rates, you have to pay the debt holders a lot in terms of interest payments, and it weighs down those companies. So the Russell, still a bit of a patient trade for me. I'm not in any rush to pick this up unless I get a substantial discount down here in the mid 190s. And now lastly, guys, taking a look at the Dow Jones. So the Dow Jones looking somewhat decent here today. Nice recovery, 0.8%. However, the Dow Jones is currently in a daily downtrend. The Dow Jones really hasn't been in a daily downtrend in a very long time, right? Take a look. The last one was right here, back here, pretty much at the turn of the year, and they were able to engulf that right away. A more meaningful one like this, you would really have to go back here, guys, right? Well, we had a little one right here, but it was kind of a sideways range. We had massive support down here. Now we've really flushed our most recent support, right? So this area right here, 39,250 was a big one. We're now trading below that, now trading below our moving averages, and we haven't traded below these moving averages, guys, in the past 5 months. So it has to be notable to us. What I'm seeing today is we're really, trying to move up the hourly here. But if we move up next Monday, I do believe we may get rejected at our first attempt right here at the 39,250 mark. If you pull up into there, right, maybe just get rejected, and then it'll be up to the bulls to prove to us that they want to protect the double bottom and reverse this into a daily uptrend. So the key level to watch here, guys, is going to be this one right here, 38,471. Why is that one so important? Well, it's your weekly lows, right? This is a beautiful weekly uptrend right here. Your weekly higher lows, recent ones are right here. So if we were to flush this, well, they would join XLF in being the second index at this point, right? Which would be setting a pretty much loss of the weekly uptrend. So that has to be notable to us. Key levels as well, RSI, currently cooling down, struggling to the downside a little bit. Well, the RSI is getting more attractive, I should say. The one that's struggling is the MACD here, starting to curl. You can really see that momentum is not what it was all the way over here. You can see the Dow Jones struggling really to push higher in the context of the last month and a half at this point after such a substantial rally here. So maybe just a little bit of sideways consolidation. We are protecting that weekly 12 EMA. We will see what next week holds in store. Yields, we've already went over them, but just a quick recap here, guys, right? So your short-term bulls are in control of yields right now. We do have the continuation of the weekly uptrend right now, and we're just pretty much looking at this point for a monthly lower high into lower low. I do believe the lower high will be set once interest rates actually do start coming down. So after that first rate cut, am I expecting something like this before? No, probably not. Maybe just a slow grind higher as this atmosphere of uncertainty still persists, right? But once we get confirmation, how many rate cuts this year and when the first one's going to be, I think that your bond traders are going to have more light on that. And at that point, guys, yields most likely will start their inevitable downtrend, right? Because 4.66 on the 20-year and 4.4 on the 10-year, in my opinion, is just too high. I don't believe rates are going back to zero, but even if we get back to a target rate of 2.5, these rates are really high. Your longer-term yields, if your short-term yields, guys, 1 to 2 year bonds, if they're back to trading once rates are down to 2%, let's say, in the foreseeable future, these will come down pretty much down to your 3% range. Usually there's not much more premium than that, but obviously these are yields, guys. They take time to move, right? So it's a very slow trade. I will re-enter this trade eventually, trying to make a play via TLT, TMF specifically, which is the 3-time leveraged version of your TLT 20-year bonds, but I just don't think the trade is ready yet. That's why I exited the position not too long ago. And we're just looking to maybe get a better entry here once we get closer to that first rate cut. Now, moving on to our big tech names, guys. So starting off with Apple. So Apple up 0.45% today, even though it doesn't show, right? Red candle. I would love to see, guys, Apple be able to put, 2 big green candles back to back, but they really haven't been able to do that too often in pretty much since the start of the year, pretty much, right? Save for this period, early January right here, really haven't had too much momentum on Apple. So what we can see is the bulls are doing a great job of protecting this low right here, guys. The 168 level is currently being desperately protected by your bulls. We are in the context of a daily downtrend. Now, we're looking for leg number 3, but you can see here that the bears are having a hard time flushing this area. So what do I need to see from the bulls over the course of next week? Well, number 1, we need to change this hourly time frame back to the bulls. So they try to make an attempt at it today, couldn't get it done. So what I need to say in Monday's trading, recapture of the hourly by the bulls, which will lead us to believe that our daily consolidation is finished and that we may be due for a little bit more of a daily bounce. We needed the daily bounce to get as high as possible in relation to 173.58. Do that, get me as high up as possible, and you have a chance at resetting the daily higher lows for a daily uptrend. The attempt yesterday was a very nice attempt, but as you can see, it got washed away by yesterday's fear. So now we really have to start all over again with those lower time frame trend changes. So keep an eye on that, guys. The size of this bounce will be key. I'd like to see them get as high about as 172. Give me a green candle close into 172, and the bulls will have the best chance at either engulfing and then setting the daily higher low, or just doing the 2-step for engulfing our most recent lower high. So that's what I'm looking out for on Apple. Obviously, your longer term timeframes, well, we're in the context of a weekly downtrend, trying to protect our last area of defense right here, 166. And it does appear that this level is a very heavily contested area by the bulls, which is why we haven't really been able to flush the 170 by too wide of a margin in the past 5 weeks at this point, despite all the negative headlines that have been affecting Apple. So still looking good, still interested in trading this as long as it maintains in the lower 170s, high 160s, still a very juicy trade in my opinion. Now moving on to AMD. AMD having a little bit of recovery today, 2.77%, but it really doesn't compare, right? Does it to the 8.5% drop that we had yesterday? So it looks like nothing, even though it was a 3% day. Now AMD, we are still in the context of this extended daily downtrend right here. So at this point, the bulls need to prove a couple things to us. They need to start this bounce, which they already have. So step number one is out of the way. Now, what they need to do is continue this hourly trend change into Monday, and we need to recapture as much of this massive candle as humanly possible in this daily bounce context. So as of now, the daily bounce is underway, but we have only recaptured about 38% of the move. That is just not good enough. We need to see them get as high as about 176. Get me up to 176 in the next few days of trading, and the bulls may have a shot at recapturing the daily uptrend and start also making a shot here at recapturing your moving averages, which are currently above us right now, and recapturing the top end of this congestion range, right? 182.50 roughly, which is that line right here that we're currently sitting at. So engulfing move is going to be tough in my opinion because of all the overhead resistance, but they definitely have a shot at doing the two-step. One thing's for sure, what you would not want to see is rolling over and flushing these lows right here. That would not be good. The bulls did a great job of protecting them back here, and these lows are important because it's the previous all-time high and also previous support level back here in Jan and Feb for about 5 weeks time. So this is the very, very big level. If we do get the daily uptrend shift by the bulls at this point, we'll just be looking for a weekly lower high and then looking to maybe change this weekly trend back to bull domination pretty much, right? As of now, though, AMD looking kind of weak. If we do open lower here next week, maybe in the 168, 166, I may be looking for some short puts here down in the 158, 155 region below this area right here, just representing some good value. That's really my best spot for AMD that I'm looking for, as close as possible to 150, 140, but even the mid 150s, I would not be opposed to making that trade. Now moving on to Amazon. Amazon looking fairly good, but my coffee's looking even better. Give me a sec. All right, so Amazon right here looking very good, finally getting the follow through on the breakout. They had it yesterday, but got denied by the end of day sell-off yesterday. Now really following through with it. 185.07 up almost 3% on the day. Daily uptrend simply continues at this point. Any pullback, just going to be looking for a daily higher low for potential trend continuation at this point. We're now above, right, the 180.5, which was acting as resistance for a while for our bulls. Every time we touched it, we tried and tried and tried. Now we're above it. We're also cleanly above the larger area of resistance we were watching, which was the 178 mark. So now we're on the march to the all-time highs, very close. 188 is going to be our all-time highs. And I do believe if our bullish momentum in the markets, the recovery from yesterday's drop, if it continues into Monday and Tuesday, would not be surprised to see Amazon make an attempt at striking those all-time highs down. So Amazon looking very, very good. No red flags at all. And now that we're above the 178, if we pull back, most likely we will try to use this area, guys, as some big support to just continue this if ever the bulls are not able to get it down, to get it done back to the all-time highs in one clean shot, right? So everything on Amazon looking very good. Now, moving on to Google. Google as well, 1.32% to the upside, looking fairly decent. So Google was never in jeopardy of losing anything. They had created a ton of space, and any move lower, we were just looking for the lower high, anything pretty much above 147.06. Now, it does appear as of yesterday's trading that we got it. We got the daily bounce underway. The bulls did a great job here of making that engulfing move on the hourly. Now the hourly trend change needs to be completed, but the bulls were able to take back a lot of this move. So arguably, your daily lower high is set right here, 151.10, and now we'll just be looking for that all-time high move, which is going to be your previous ones right here, about 157. Google looking very, very, very good. Even on the weekly, guys, we were in a weekly downtrend. We have engulfed the entire move and still no sign of weekly consolidation. So really 100% engulfing move. Google is looking amazing. Personally, myself, if we do roll over for some which reason, right, I'll be looking to play Google anything under 150. I'll probably play it somewhat aggressively all the way down to about that 147 level. Looking very good. Oops, now moving on to Meta. So Meta looking pretty good as well. So 3.21% to the upside. Meta looking amazing as a matter of fact, right? Looking good. Daily uptrend nicely underway. 3% on the day. Gorgeous day, no red flags at all. Now clearly back above our areas, the moving average and our previous area of resistance, which was now support. You can see how well the bulls did of doing that. So when I draw my resistance areas, guys, always understand that resistance is never really one location, right? It's always a range. So always act as this. Whenever you're drawing support and resistance, you can see when I draw the larger areas, I like to draw lines because they're simple to see, but in all reality, it is always it's a range, right? So it's a range. And that's what we had right here as well. A bit of a range pretty much between 491 and that 481 level. And you can see the bulls really maintain this very, very nicely. Now we're cleanly above that on the weekly. Weekly breakout is fully underway at this point. So weekly uptrend simply continues on Meta at this point. No red flags whatsoever. Just looking for that weekly continuation. Pretty much at this point, your next area of resistance will be 550. Meta earnings coming up fairly quickly here in the end of April, 24th of April. Everything looking good. Meta really one of your lead bulls at this point. Amazon, Google, and Meta right now are your lead bulls, really taking over the reins from some of our earlier lead bulls, which were AMD, NVIDIA really, right? Back here. And even Netflix to some point was a lead bull for a long time. Microsoft kind of got trapped for a while back here, right? So really the outperformance, Amazon, Google, and Meta for now. Now moving on to Microsoft. Microsoft, healthy day of recovery as well, 1.83% to the upside. So we were always in a daily uptrend back here. Then we lost it ever so slightly back here with a daily downtrend, but that was just very healthy weekly consolidation, guys. We were talking about this where Microsoft does these moves up, consolidate sideways, move up, consolidate sideways. Now we had the move up. We came back to test the top end of this previous resistance range, which was now support. And we touched that beautifully, and now it does appear as though the bulls want to run away with it. So what we'll be looking out for here, guys, is pretty much a break of yesterday's high. Break of yesterday's high would be an engulfing move, and you would cancel out this daily uptrend. You would create the space for the bulls to reverse this in their own favor. So that's what we're on the watch for next week for Microsoft. Looking very, very, very good. And obviously yesterday I gave all the possible scenarios for the downside, but let's say we move to the downside, right? And get back within this range. Such a solid range here, guys. We'll be targeting the lower end of that range at that point. $400 is going to be the line in the sand level, but this area is so congested that I don't think that the bears are going to get through it very easily unless the rest of the market really falls apart. Now moving on to Netflix. Netflix also looking pretty good, 3% to the upside here. So looking fairly decent. Now cracking back above, big engulfing move by the bulls after losing the 12 EMA, something that had not happened in a while. We raised some red flags because the bears had a shot at setting the lower high and potentially going lower low and sending us into weekly consolidation. But the bulls said, no, you're not going to do that to me. We'll just engulf and move higher. So at this point, guys, the daily downtrend is now stopped. We now have a daily engulfing move. We're just going to be looking for a daily higher low, anything pretty much above 601, looking for the daily higher low for further trend continuation. No red flags on Netflix anymore as of yet. On the weekly still looking very good. Weekly in the context of a gorgeous weekly uptrend right now, right? So even if we do get a pullback here, guys, nothing to worry about. Anything pretty much above 550, which is our most recent, very clear weekly higher low. We'll just be looking for that higher low for further trend continuation. And 575 is going to be such a big level. Earnings pretty much coming up in 2 weeks' time, Thursday, the 18th of April. So we'll be very curious at that point. Earnings is going to send us one of two ways, guys. It's going to send us close to the all-time highs, or it's going to send us back into my buy zone, anything under 575 down to 550. If we get a negative earnings reaction, that could bring us down from current levels, roughly 10-12%. That would be a very juicy dip. If we do get it, I'll definitely be taking it. Now moving on to NVIDIA. So NVIDIA today, a little bit of recovery, 2.45%. Really doesn't look like much because of yesterday's big engulfing candle, right? Almost 5.5% top to bottom move on NVIDIA. But NVIDIA, don't count them out yet, right? Why? Because your long-term bulls never lost control. Simply just looking for a little bit of monthly consolidation, even a little bit of weekly consolidation. We really hadn't seen 2 weeks in a row of red on NVIDIA pretty much since the start of the year. So it's been really, at this point, 4 months, right? At least 3 full months that we've had nothing but rally on NVIDIA. So this slight daily downtrend at this point was nothing to worry about until we lost 850. And so far we have not lost 850. That was really a big level for the bulls to defend right here. We're defending it fairly nicely right now. So now it'll be up to the bulls, guys, to smash the high of yesterday. If we can get back above the high of yesterday, it gives the bulls the best chance at engulfing, resetting the daily uptrend. right? Or just pretty much setting the higher low here and resetting it that way. So NVIDIA bulls, don't count them out yet, not until we lose 950. If you lose 950, well, you set the bears up nicely to then use your 950 as resistance and flush for just further weekly consolidation. And as you can see here, guys, right, weekly consolidation, if anything, would just be very, very, very healthy. Even 1 or 2 more weeks come down to the 800 level, it'll just pretty much be a weekly higher low looking for further trend continuation. So no red flags on NVIDIA stock. Now moving on to Tesla. Tesla looking fairly, red here today, but that's just because of the increase in yields. As we explained at the beginning of the video, guys, anytime yields have a very aggressive day, I would be very surprised to see Tesla in the green. So that was another case of that today, 3.63% to the downside, despite the rest of the market really, showing signs of gains throughout the day. A lot of, interest rate cyclical stocks, right, just not doing well. Take a look at your some of your solar plays, right? So CSIQ, the one that I was in, 7.5%. That's why I got out of this one back here, guys, because I saw the writing on the wall and was a good exit on the trade for me. Tesla, you can look at the other big one that a lot of people talk about all the time, Enphase, also one of your solar inverter plays. They were down 7% on the day. So really, automakers as a whole, even I think Rivian was pretty much red here today, right? So automakers, EV makers as a whole, red on the day, and solar plays as well. Even some of your utilities plays here, guys, did not do too well on the day. You can see it was a fairly mixed day in utilities. If I were to move my big head to the side, you can see that for the most part, guys, utilities were red on the day because they're just so sensitive to interest rates. So very unfortunate for Tesla to not participate in today's rally, but that's just a byproduct of the cyclical nature of that business, just highly exposed to interest rates. So at this point, guys, they did flush the lows. So your daily downtrend, unfortunately, does simply continue. If you want the bulls to reverse this, well, we need to see them first change the hourly trend in their favor. They did a nice attempt here this morning at trying to make it happen. So we'll see if we can break today's high pretty much of the 1130 candle. If we can break that, we'll reset the hourly trend and we'll look to see how high can the bulls bounce in relation to 176. If we can bounce and engulf it, perfect. It gives us a chance to reset the daily uptrend leading into earnings. But if for whatever reason, guys, we continue this rollover, well, we are just heading a bit lower. And at that point, we have to look to our lower area of confluence. And that would be the down part of your downtrending channel, which coincides with your 152 lows right here. Really one of the last lines of defense for the bulls until we get into some, fairly lower numbers here around the lower 130 level. So hopefully the bulls are able to hold that up. In terms of your daily RSI, guys, unfortunately, we're not crushed. Not as much as we were crushed back here to warrant a bounce, right? At this point, it's just a kind of a slow grind down. So we'll see what happens for Tesla. The biggest catalyst for Tesla is going to be Tuesday, 23rd of April for their earnings specifically. Now, moving on to Palantir. Palantir not looking too bad as well, 2.14% to the upside. However, we are still in the context of this daily downtrend. Now, what the bulls are looking to do here, guys, is we're really looking at this point to smash 2405. If we can back above 2405, you would put an end to this potential daily, the daily downtrend that we're in currently, right? And you would give the bulls a chance to set the daily uptrend, get back above our moving averages, which are sitting right around, roughly the 2350 mark, get back above this previous big line of support, which is currently acting as resistance. You can see how hard it is for the bulls to push above that, even in days where the market is ripping, right? So we're still on the watch for that on Palantir. They've made some good progress intraday to try and reverse this hourly trend as much as they can. We'll keep this on the watch next week if they can break this, really reset the daily. And if they do that, well, your weekly higher lows or your weekly lows are set. And then we'll be looking, can the bulls put in an engulfing move, reset this weekly uptrend? Because as of recently, we've lost the weekly uptrend with the loss of these lows right here. Palantir looking fairly good, if I must admit myself, right? We've always been looking $21.50 down to $19. As long as we stay in the lower end of this range, let's say we just continue to the downside next week over some negativity, I'll be looking to play, you guys know me, $21.50 down to 19 on the short puts. Very juicy area, big prior support, previous 52-week high resistance. And at this point, I do believe that is where the consolidation will be met with a lot of long-term bullish support because the bulls are in full control of your monthly timeframes. Just looking for the monthly higher low for further trend continuation, trying to attack the 28 level at some point this year. Now, lastly, moving on to PayPal. PayPal not looking too bad either, right? So PayPal 65.15, up about 1% on the day, and PayPal just trying its best to save the capacity for the bulls to reset the daily uptrend, right? We had a beautiful daily uptrend going right here, but unfortunately we lost it over the course of the week by flushing our most recent higher lows. So now your bears had a chance with yesterday's lower high to flush these lows today. They did not do it. We're trying to maintain this double bottom around this area. The hourly time frame shows it best. The bulls are trying to recover that hourly trend. But if next week is negative for the markets and we lose this, well, guys, we'll just be looking for the follow through of this daily downtrend. And that at that point, you have to look out to a few key levels of support. Number one is going to be your 200-day moving average sitting right here, 63.69. We have been doing a great job over the last 3 weeks of staying above our 200-day moving average. We have not been above that pretty much in the last 2.5 years. And we're also above this top end of this downtrending channel line. We've been netly above that now for about the past month of trading. So technically it is a breakout trade. The weekly is also not looking too bad despite this first week of consolidation here. We are in the context of an overall weekly uptrend, as you can see right here, new weekly uptrend, looking for the higher low for the potential run further. So if we come down a bit more, guys, this yellow line area, you can see why, right? Big resistance as well. Lower end of it was resistance. So this is the chop zone area. Your weekly moving averages are there as well. If we come down a bit more, I'll be looking to make some plays on PayPal. 63 down to about $61 is my sweet spot for PayPal, because then I really think, guys, that we will be attacking the $75 mark, because it is now a technical breakout and the monthly is also looking like it wants to put in a monthly uptrend here. I really think this one will benefit from a decreasing interest rate environment. So as we get closer and closer to that first rate cut, whether it's in June or July, I think PayPal stock will start getting even more active in really starting to put in that pressure here on the technicals. So that may be in maybe the later part of the month of April, even maybe to early May. We'll see. Maybe even your tech earnings give a big catalyst to this. They report earnings themselves the 30th of April. So that's pretty much everything I had for you guys today in our market rundowns. Now let's do some of our subscriber requests. So James asking, can I break down Etsy? No problem at all, James. Let's get right into Etsy right now. So in terms of the Etsy trade, well, we covered this one on earnings, James. If you haven't seen my video where we covered their most recent earnings, I'll leave it down in the description. I spent maybe about 10-12 minutes breaking down their fundamentals. Now, I do like this company as a whole, but I have to admit, there are some companies that I like more. So let's break down exactly what is the company is going through right now. So what happened with Etsy, essentially, if you want me to give you a very brief rundown, Etsy pretty much had a very bad year in 2022. They built up, they racked up a lot of debt, right? Because the supply chains were obviously somewhat broken. So they were kind of racking up a little bit of debt. And in the process, guys, they really kind of eroded their net margins. This was a company that really never had a problem with net margins. Let me move myself over. They really never had a problem with positive net margins until 2022. So since then, it's been pretty much in a recovery story, which is why the stock is still down, right? You can see EPS was nicely trending, got crushed in 2022. And now to get back to the pandemic years, it's really going to take, the next 2-3 years to get back to some of those EPS levels, which is why the stock is kind of crushed. Revenue expansion is currently nice, but everybody looks at EPS, which is unfortunate for this stock as a whole. Now, in terms of your valuation on this stock, now I do understand that this stock is really down, 78% from its all-time highs. However, we have to remember that the company was not generating the same EPS numbers as it was back here as it is right now. They're in the process of turning around, but still a lengthy process. They've cut a lot of costs during the past year to try to alleviate the situation. That being said, their EPS growth for the next couple of years is about 16% per year. Their PE ratio at $65 right now is about a 25, which gives them, if we were to take this PE as an expression of their growth rate for the next foreseeable future, it gives them a peg of about 1.59. Anything between 1 and 2 is not too bad. You want this to be under 1 for sure. So even though this stock looks like it's absolutely crushed, the valuation is not technically cheap, not as cheap as it could be. Now, in terms of the technicals, guys, well, the technicals really, it is currently trapped in a downtrend of everything, right? So the monthly downtrend has been clear as day. We're trying to protect these lows, bulls trying to put in the monthly higher low for the eventual trend change, guys. But this is in a cyclical category as well. It is discretionary income. So arguably, they are running the same problems that other retailers such as Walmart, Target, Nike, right, are running into. It's just consumers may just not have the disposable income to be buying as much as they were around here, right? During the boom when money was cheap and people had a lot of savings. Now people are more careful with their purchases. So this stock is just getting caught in that whole narrative of disposable income. It's a shame because I do like this company. Weekly downtrend is obviously a factor as well. So what I really want to see, James, for this company to start turning the corner is number one, we need to start reversing this daily trend, right? We haven't had a daily uptrend since the month of February. Now, if we can get an engulfing move at a certain point and really start changing this daily and then potentially start attacking your most recent lower high on the weekly, 72, 73 bucks, then it's going to look a whole lot better because then your bulls will be in control of the daily. They will be in now trying to make the attempt at the weekly trend change for that eventual shift. And this stock reminds me a lot of PayPal, right? You just need to be patient with it until it manifests those changes, guys, right? And changing the daily and changing the weekly trend as well. It was caught in a downtrend for a long time, but eventually they do tend to recover, especially when the valuation is at a modest level right now, right? So we'll just keep a close eye on that. The next area of support is obviously down here at 61.50. I wouldn't really be opposed to starting a position down here if you love the company more than anything. They do have future growth prospects, but if you like the retail trade, my favorite retail trade other than Amazon, I make that very public on the channel. My favorite retail trade right now is Mercado Libre. They are the leader in Latin America. They're basically a combination. If you were to combine Square, PayPal, and Amazon together in one company, this is Mercado Libre. Their margins are very, very decent for their line of business. Their e-commerce line of business, their margins are comparable to Amazon. They pump out about, anywhere between 3-4% net margins, but really where most of their net margins come in are from their fintech business, which is a very, very fast growing and expansive business for them. And they are actually in the trending direction that we want. They are in a monthly uptrend. They have tremendous growth prospects for the future. Look at this EPS expansion. Look at this revenue expansion. Everything's beautiful for the company. I also did a review of their earnings. I can leave the link down in the video for you, James, as well. If you want to hear me break down this company for about 10 minutes as well, we go through their full fundamental analysis. They have a lot better numbers. Even though their share price is close to the all-time high, here's why the PEG ratio matters so much, right? It's an expression of growth. So take a look at your EPS growth through 2027. This is on a per year basis, 51%, which is very good. Their PE, we valued them after earnings at 1630, and they were a 47. And their PE ratio at 1630 was about a 0.92. Anything under 1 is fantastic. So you can obviously understand me that I have been accumulating a few shares down in the mid 1500 range, which is very good, guys. Looking for the monthly higher low for further trend continuation. This is a big area of accumulation here. And since we're down, from 1630 roughly, let's say we're about 1500 divided by 1630, we're at a discount of about 8%. So if we really do 0.92 times, funny enough, 0.92, their PEG ratio now is about 0.85. So that's really attractive for a company with such high growth. So this is my favorite play in the whole retail segment, them and Amazon combined, I must admit. And obviously you have some plays that are not really connected to these two companies, but my other favorite trade in the whole retail sector right now is definitely e.l.f. Beauty on this little dip area right here. And we talked about this one this week as well. Their PEG ratio is about 2.2 at 200. Now it's down from 200, so I have to redo the analysis. But this one in terms of the PEG ratio right here is going to be about let's call it 161 divided by 200. That's about 80%. So if we do 80% of this PEG ratio right here, 0.8 times your 2.02, it should be about 1.6, right? So looking very good on e.l.f. Beauty. Such a fantastic company, such a great margin, such a great marketing story as well. And the valuation is roughly in line, even though they're at near all-time highs. The 1.6 PEG is literally exactly the same as Etsy's, right? And then you have those two other companies are obviously doing a lot better financially and also in terms of their favor factor from Wall Street, right? So those are just a few of the things, James, for Etsy. So thank you very much for that one. And now we're going to do Naveed. So Naveed, we're going to break down these. I'm not going to do fundamentals on all of these because the list is quite extensive, but we're going to do some quick technicals and some quick very quick fundamental ratios just so we can get through these. So number one, we're going to take a look at CLS. So if you guys don't know CLS, Celestica, essentially what they do is they manufacture electronic equipment. So think circuit boards and everything you possibly need to put together medical device machines, computers, any electronic device you can think of that has a circuit board and different components inside of it. Celestica does a lot of this. It's a Canadian company, but most of their manufacturing is offshore in nations that have a low labor rate. So the cost of employees is relatively low. A lot of their factories, if I'm not mistaken, are in Thailand. So in this one specifically, guys, right, Naveed, I know why you're asking this one, because it's a massive rally, right? The RSI on the monthly is quite overbought here. And the last time it got to these levels was in the .com bubble. But now the company is doing a lot better. You can see here the quick things that I check out, just a few things that I check out if you guys want to do this at home, right? I take a look at your analysts. Are the analysts bearish or bullish? In this case, they're largely bullish despite the most recent increases in price. Look at this EPS expansion. This is 100% coming from the AI boom, guys, 100%. Now, moving nicely, EPS expansion, moving forward in revenue expansion, so the company is moving in the right direction. Do they have decent profit margins? Well, their profit margins are not that high, about 4%, but they are a goods producing company. So usually goods producing company, if they can have margins above 10%, it's an excellent company. But being positive here is a good sign. In terms of their financial ratios, then we'll get into the technicals, guys. Financial ratios not looking too bad. 2024 forward PE in light of their very nice EPS growth of 19% is about a 16.9, and their PEG ratio at $49 is about a 0.9. Very good. So despite the fact that the stock has rallied a ton, it is still fairly valued. It's actually cheap if you take it in relation to the PEG ratio. Now, I know what you're saying. The monthly RSI is a little bit overbought, but let me just take you back to one of our famous examples, NVIDIA. Take a look at NVIDIA from 2016 to 2018. The RSI was massively overbought and the company kept going up. It was not the same NVIDIA as it is today. They were only doing graphics cards back then. Now let's take a look at 2020 and 2021. They were also not doing their data center business, and look how long they stayed overbought. 2020 through December 2021, a year and a quarter. So these things can last sometimes. You might say, but Will, they're the exception, right? No, they're really not. You can see Meta here, pretty much in their growth phase, right? 2016, all the way pretty much through 2017, except for a little bit of a blip right here in the end of 2016, stayed overbought on the monthly for so long. So these things can stay overbought. The one thing I would be keeping an eye on, guys, right, is the fact that are we maintaining trend? We are maintaining trend. The daily bulls are in control, still just looking for your daily higher low for further trend continuation. Weekly bulls, full control, beautiful weekly consolidation right here, right? Cooled us off for a little bit, and now it appears as the bulls are ready for more. So very tough for me to give my, whether I would buy this one or not. It really depends how much you know about the company, how much you know about their competitors, which I have pulled up on screen right now. So we'll go through a few of them, right? SANM, you can see that a lot of them have roughly the same price curves, right? They've really benefited from a tremendous increase pretty much over the last year. Now, this one, not the same chart, I'll agree with you, but one that is a company called Flex, seems to be one of their largest competitors. I don't know this one specifically, but the whole industry as a whole, guys, is, on the list in terms of, their expansion because of this new boom in AI. So the whole, if it's a byproduct of the whole industry expanding, then you can still potentially have some juice in this trade. The ratios are relatively cheap. I understand it sucks buying something when you think it's going only up. So don't look at the price, look at the valuation. Is the valuation decent? Yes, it is. Look at some of your competitors. Are the competitors expanding as well? Yes, it means the whole industry is growing. It means that you have momentum behind the trade. It's not just one company that's an outlier. So this one I actually like for continuation at this point, in spite of the fact that it's been going just straight up. Your next target of resistance, well, they're kind of there right now. The next one's going to be about 55. But it wouldn't be surprising in the context of a bull market, guys, for this ratio to start get a little overvalued. And that would really only happen if we start getting into about the $70 range. So still potentially some room to move. Obviously, you kind of want to buy it if it ever has a big dip, of course. But, something like this, if you want to build a position, the way I do it is, let's say I want to buy, I don't know, like 500 shares. I'll buy 100 right now, and then if it dips, I'll start adding aggressively, right? If I can only get my 100 in, well, that was it, you know, but technically I really would like to get this one on a little bit of a dip. So these dips would have been a great entry point. Now I can understand this one can continue to run as a whole. Now, moving on to our second trade. The second trade was a Vertiv, actually. So VRT, yes, this is one that I do cover. I don't really cover it often on the channel, but it is a very solid company nonetheless. So take a look at this massive expansion, guys. Massive expansion. Now I can understand the frustration if you sold here after such a significant rally, and now it's up here and you're wondering, what do I do with? Do I buy back? It's going to run away. It's going to keep running. Keep in mind, monthly RSI still overbought, but even this company was overbought for a significant amount of time. This is really in line with the whole markets. The only time a stock like this is going to correct is if the S&P and the QQQ corrects as a whole. In terms of the valuation, guys, looking very good. Very, very juicy revenue and EPS expansion through 2027. Their forward PE at 85 is about a 37 for 2024, and their PEG ratio, so their PE in relation to their growth, is about a 1.32. Also, the company is trading relatively cheap. Now, where do a lot of analysts sit on the stock? Look at this, strong buys as a whole. Price targets all the way up to 100, but a few people are slightly below. We need to look at EPS expansion is positive. Revenue expansion is positive as well. So the company doing all the right things. This is a technical masterpiece right now, respecting all the levels, right? Higher low, higher high. Now we're just looking to move higher, even on the weekly as well, right? Little bit extended on the weekly, but these things can stay extended, guys, for a long time, you know? The problem is a lot of people hesitate to buy things when they see that they're this extended. It just depends on, you have to employ a different strategy at that point, right? Maybe if you want to buy 300 shares, you buy 100 now to participate in the stock because the valuation is decent, but maybe you just start writing puts under to provide some premium if this thing rises. And then eventually when it pulls back and hits one of your orders, you just accumulate 100 extra shares, and you do that until you're fully sized on the position. So very nice stock at this point, guys. Technical levels above us, we really don't have any. So at this point, psychological 100, and even at 100, guys, you know, it's going to be about a, just call it 17, 18% move to the upside, right? Let's do it exactly on the chart. Up here is about 19, you know, 18, 19%. So I wasn't too far off. So still good, guys. Even 20% upside in this PEG ratio will only put them at about a 1.5, 1.55. So still some room to expand. Obviously not as juicy of a trade as was back here, but could still be some meat left on the bone in this one. I'd really be looking for them to continue to respect these technical levels here, guys. So hopefully that helps on that one. Naveed, now let's do Adobe real quick. So Adobe, not looking too bad as well. So Adobe, the reason I say it's not looking too bad, guys, because even though we got a massive sell-off in the last couple of months, we are just still looking right now to set a monthly low and then potentially regain this, because we have lost the monthly uptrend, unfortunately. So it could take a little bit of time to get back. But there's really nothing wrong with the company as a whole. As a matter of fact, the more it drops, the juicier it gets. So I would take a close eye on this level right here. It's the level that really stands out to me, right? This whole 450 level right down here really has some good price support in your prior levels right here and has some previous resistance right here. So that arguably is going to be the next area of entry. In terms of the valuation, I did this one in terms of earnings. So if you haven't seen that one, I'll leave it down below in the comments for the Adobe earnings recap and see what happened to this company on earnings. But let's break down some of their valuations if you haven't seen it. So I redid them at 485, the current price. Forward PE for 2024, about a 27, not too bad. Their PEG ratio, about a 2.15. That's okay. We do have I did a valuation as well. If we give them a 35 to 40 PE for a forward basis now, you know, which is relatively what the company, when I did the earnings, we looked at historical PE averages. What does Adobe usually trade at in the future? Usually it always trades at between 35 to 40 on a historical average. So now we're trading below our historical average. So the company can move up if it were to get back to its historical average with the 2024 EPS, which is going to be this number right here, the $18 per share number, then it should trade between 630 and 17 if we're expecting fair value. So there is some good appreciation potential on this stock. And most analysts do agree, guys. You can see most of their price targets are there as well, between $620 and about $700. So Adobe, nothing wrong with the company, just a bit of technical sell-off right now. So we are in the context of this weekly downtrend, quickly coming into a very large area of support. So at this point, guys, I would, if I really like Adobe, I'm considering maybe starting to start a couple positions. I would go a bit more heavy around this 200 weekly MA if it comes down to us, looking fairly good down there. Daily downtrend as well, well in motion right now. So Adobe's been, kind of a bit left behind since your mid-February moment, but just representing a great buying opportunity. We haven't had these prices, guys, since last year in June and July. So if you love the company as a whole, really nothing wrong with it right now. I know a lot of people are saying that their business model is potentially in jeopardy because of all the new AI image generators, and a lot of Adobe's business is Photoshop and video editing based, but they have a lot more products than that, right? So it's going to be a long time before people start disrupting Adobe's business truly. So I don't really believe that there's any near-term risk of the business losing market share aggressively. So that being said, decent little buying opportunity down here. And now lastly, guys, let's cover Net. So Net Cloudflare. So great question, Naveed. So Cloudflare, one of your cybersecurity plays that we cover on the channel quite regularly. In terms of the valuation, even though we are crushed from the all-time highs, down about 55.76%, right? And we are in the context of a very nice, move higher. Now that we are in a bit of a weekly downtrend, however, that's just very healthy monthly consolidation, right? So monthly bulls, full control of this, back in a monthly uptrend, just looking for a monthly higher low for further trend expansion. I would really look towards the 85 area. 85 down to area is really a juicy opportunity specifically for this stock. Even up here, on a technical basis, it's not that bad. My only concern is the valuation. So take a look. Their revenue and EPS growth is very high, but I have to admit, guys, right? Even though their forward P at 96 is about a 165, their forward PEG at $96 is about a 4.85. Anything above 2 starts getting rich. When you start getting between 4 and 5, it's very, 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 very expensive. Now, I understand the company is growing. You can see that right here. I do understand they are still net margin negative, however, but they are expanding positive EPS. That is very good, right? So on this company, guys, not my favorite cybersecurity play. I do understand they're a large player in the game. Not my favorite one, even though the entire industry is recovering, right? You can see CrowdStrike did a great job recovering its losses. Even a company like Zscaler is on the rise as well. Other companies like Datadog, they're also on the rise too. Palo Alto Networks, although they've been on a drop, right? They've done a great job of recovering a lot of the losses of 2022. Clear monthly uptrend right now, right? The only problem I have with Cloudflare right here is the valuation. They're just not profitable yet. And at such a high valuation, there's other profitable stocks that, although they're not 60% from the all-time high, right? They're close to all-time high. Look at the valuation on Palo Alto. They're the market leader, 2.4 PEG, right? Take a look at Zscaler. Zscaler is also significantly off the all-time high. Take a look at this PEG ratio at the current price, because I did it for us. Only about a 1.83, and they are as well in the context of setting the monthly higher low at a big support level. This right here and probably Palo Alto Networks are my two favorite plays in cybersecurity. Now, not that Net is a bad company for any which reason. I just think that their valuation, for the fact that they're not making any money whatsoever, is trumped by companies who have a lower valuation like Fortinet. Even Fortinet is rich right now, but the company is currently profitable, right? Doing very nice net margins, and they're close to the all-time highs. Palo Alto, not that far off the all-time highs either. They're a profitable company, and they only trade at roughly a 2.4 PEG. And even Zscaler, they're the closest comparison because they're not a profitable company yet, not quarterly, not annually, but their valuation is only about a 1.83. So Net, not my favorite play in cybersecurity. That being said, it's a very good company nonetheless. It's just that, the company and a company's share price are two different things, right? You can love a company, but not like the share price. And that's my current feelings on Zscaler. So that's pretty much everything for today's video, guys. Hope you enjoyed the update. And if you did, consider dropping a like on the channel. I would really appreciate that for the growth of the channel. Consider subscribing as well. We would love to have you here. We do these videos every Monday to Friday. And consider dropping a comment if you have any questions or you would like me to cover your ticker potentially over the next week, as we're not covering earnings much before the next 2 weeks. So thank you guys and have a beautiful weekend. I will see you on Monday. Take care. Peace.